What is up, people? Miles here with Keep the Change, and today we are taking a deep look into Activision stock. So a lot's happened this week. A bunch of companies reported earnings. Also, I got a haircut, so now I'm a young, handsome man. If you saw my Snapchat stock video, you would know that my hair was getting absolutely out of control, so I had to go get the cut. Thanks for noticing. Now, in terms of the stock market, a bunch of stocks have reported earnings, mainly being Amazon, Google, Facebook, Microsoft, Visa, all this week. However, I decided to make this video on Activision because I don't think a lot of people are talking about it, and I haven't actually reviewed this stock ever, and I think it's a really interesting pick. With all that being said, you guys make sure to hit that like button and also subscribe as well. I upload videos every Tuesday and every Friday, so don't miss out. If you don't like and subscribe, then you're gonna stub your toe really hard. So Activision stock, most people would know them for their main game, Call of Duty. Now, I don't know about you guys, but growing up as a kid, I loved Call of Duty. It was a really fun game. I loved Modern Warfare 2, I loved Black Ops, all that good stuff. However, in 2013, 2014, Call of Duty started falling off. It kind of became a meme. We're not gonna lie, okay? It just became a meme. Basically, year in, year out of the same thing. Everyone knew what to expect. It wasn't as good. Multiplayer fell off. At one point, they just removed the campaign, which was totally stupid. Okay, I like the campaign still. However, in 2019, they released Call of Duty Modern Warfare, and that basically changed everything. And for the first time in years, people actually were talking about Call of Duty again. I mean, seriously, this franchise was almost dead. Good as dead, basically. But they had a massive comeback with Modern Warfare, however, and a bunch of people played it, talked about it, and then they also had Warzone, which basically Warzone is their own free-to-play battle royale type game, which is kind of an extension of Modern Warfare, but it's sort of in the same category. Now, this was the most hype that Call of Duty had seen in years, and Activision stock has gone up a lot because of it. After dropping from $80 in 2018 to $40 in 2019, now in 2020, they're back up to $80, so they basically went up 100% in a matter of a year and a half. Their market cap today is sitting around $60 billion. I think they're probably one of the biggest video game publisher stocks there is. Now, not only does Activision own Call of Duty, that would be putting them in a box a little bit. They own a lot more. They own World of Warcraft, Diablo, Crash Bandicoot, King Digital, which if you don't know what King Digital is, Candy Crush, okay? They own Candy Crush, which that is just crazy. We're going to get into some stats about Candy Crush in a minute here. They're trading on a price to earnings of around 33, which actually is not too bad. However, it's not too great either, but in this type of market, 33 is somewhat fair. Their forward P is 25, so that's a little rich, but not too rich, kind of in the middle. And what's got me talking about them today is the fact that they just reported their earnings, and they actually went down like 5% after they reported. However, they came back up, so now they're only down around 2%. So let's get my opinion on why the stock didn't go up after their earnings and went down. So starting off with the big numbers, they had around $1.95 billion in revenue for quarter 3 of 2020. So they grew revenues about 46% over last year, which is an insane amount. Now, a lot of this we can thank to quarantine, as more people are inside playing more games. Obviously, people are going out less, they have less to do. However, this is also from their brands growing at such an insane rate. I mean, Call of Duty basically grew 270% year over year in terms of revenue. And another good thing going on for Call of Duty right now is they have a mobile app as well, which is getting a lot of traction. I mean, this has been out for a year already, but it's got over 300 million downloads and is immensely popular. Not only that, but this app is about to go into China as well, where they already have over 50 million pre-downloads. So the Call of Duty brand in the past year has gotten extremely big. It's always been huge, but they just had the mobile app, Warzone, and their best Call of Duty in years, serving them to grow revenues 270% in that sector. Now, what's actually insane is that their three biggest brands by far are Call of Duty, World of Warcraft, and Candy Crush. And each of these franchises bring in over $1 billion each every year, which is absolutely crazy. So their Activision monthly active users, which is basically all of their Call of Duty stuff, brings in over 111 million monthly active users every month. For another segment of theirs, Blizzard, which basically produces Overwatch and World of Warcraft, they bring in over 30 million monthly active users every single month, with Overwatch having 10 million monthly active users, which if you think about it is really cool because that game came out over 4 years ago at this point. It's extremely old. However, millions of people are still playing it every single month. And then we go to an extremely big part of their business, which is King Digital. And King Digital makes the phone app, so they make Candy Crush. Something that was really interesting to me that I heard on the earnings call is the fact that Candy Crush is still growing year over year in terms of people who play it, which is absolutely baffling to me, okay? That's like playing Fruit Ninja right now. Like, who would do that? I don't know. So Blizzard, which is Overwatch and World of Warcraft, they brought in $411 million this quarter, grew 4% year over year. year. And King Digital, for their phone apps, grew 7% year over year, bringing in $500 million in revenue for the quarter. So the fact that these brands are years old for them and still bringing in revenue is a really good sign that these are healthy, long-lasting brands. And this was an absolutely smash quarter. They had almost $2 billion in revenue, so they beat their own guidance for last quarter. Last quarter, they basically said we're going to make $1.8 billion, and they made $2 billion. And they also said they were going to make an EPS of around 65 cents per share. However, they came in at 78 cents per share, which shows massive growth in their profitability, which is a really good sign in a growing company. And something really interesting to note is that in the next 2 weeks, they're actually releasing the next Call of Duty. So this next quarter should be pretty big for them. They also are a dividend stock as well, which I like seeing. So they pay out 41 cents per share every quarter, which isn't that great of a yield. I think it's something like less than 1%, but that's still just something to note. Now let's take a look at the balance sheet as well. If we have a good balance sheet, then I can sleep good at night and stay clear of nightmares. If we have a bad one, then I am going to be an insomniac. This is not going to be good. So looking at the company's balance sheet, they have almost $7.5 billion in cash, which is a really good amount considering their market cap. And they only have $7 billion in total liabilities. So this company could pay off all their liabilities and then have over $300 million left over for a rainy day. Just for future reference, if you're new to investing, if a company has more cash than it does total liabilities, that's an extremely good sign of financial health. Now let's also pay attention to their debt levels. Are they rising? Are they declining? That's important to know. So last year they had $2.5 billion in debt, and this year they have $3.5 billion in debt. So at first glance, that's not a very good sign. However, listening to the earnings call, the reason they took on more debt made a lot of sense to me. They basically took on debt because interest rates are historically low, which is actually really smart if you think about it. Because if interest rates are something like 2 or 3% for them at the moment, and then they can make 5% on that money, they can keep the difference and actually make more taking on debt, which makes more sense for them. You don't see me saying this often, but I think taking on debt in this situation was actually good for them. They can invest even more into the company, and then it's at extremely low interest rates as well. Now, another thing I want to mention for them in terms of growth is the fact that next-gen consoles are coming out next month. So that basically means a new Xbox is coming out, the new PlayStation is coming out, a little Timmy's going to go to his mom and beg for a new Xbox, a new PlayStation, and guess what he's going to buy? That's right, baby, Call of Duty. But the point is, there's about to be a lot of hype in the gaming industry, and this is about to push it to a new level. So basically what we've got is a company with a ton of cash at a pretty fair value, a ton of growth prospects, and then on top of that, brands that have lasted years. Along with the fact that their Call of Duty brand has never been stronger, and people are still buying it every single year. So basically growing revenues, growing profits, growing monthly active users. What is this company doing wrong? Why did it go down 2% on these earnings? And that, my friend, would be a little thing called guidance. Now, guidance is basically the bane of every man's existence in the stock market, and it's basically when a company says, this is what we're going to make next quarter. They reported Q3 earnings. They said, this is how much we made this quarter. This is how much we think we'll make next quarter. So the next quarter earnings forecast was pretty low, like pessimistically low. Activision came out and said they're going to make $2 billion next quarter and then earn 63 cents per share on that. Analysts thought they would make $2.5 billion and $1.11 per share. So that's obviously a very drastic difference. But there's a couple things to note here. One, they're not including Call of Duty Mobile in their guidance, which I thought was kind of an interesting move. I don't know why they would do that, because China's about to come out and that's about to ramp up massively. And two is the fact that Activision always guides lower. They're always conservative. Now you can look at that in a couple ways, right? Because they always guide lower, so realistically most of the time they're going to smash those earnings. However, in the same sense, it also makes them seem not confident in their own ability, but like they obviously are. They just want to play it on the safe side, so take it how you will. Personally, I think they're going to destroy those earnings. I don't even think it's a question. They're obviously going to crush them. They're obviously going to grow revenues at a massive rate along with their profits, so I don't think it's going to be an issue. So I'm sure the question is on your mind, should I invest in this stock at $76 a share? And personally, I have a position in Activision, and I am not selling it anytime soon. I think in 5 years, it's going to be worth way more. I could definitely see over $100 a share by mid-2022, if not sooner, especially considering the fact that this is just such a resilient company in terms of the economy. And what I mean by that is if the economy is shut down again, this stock will actually benefit massively. More people at home means more people playing games or on their phone playing Candy Crush. Not only that, but the Call of Duty brand is stronger than it has been in years. So this is quite a good time to invest, in my opinion. So yeah, that's my opinion on Activision stock, what I thought of the earnings, and let me know what stock I should look at next, guys, okay? Down in that comment section below. But thank you so much for watching. Also, make sure to subscribe if you enjoyed, because we're super close to 100 subscribers, and I want to make like a Q&A type video once we reach that, so hopefully I can do that. But with all that being said, you guys, thanks so much for watching. It means the world to me, and love you.